Hi, welcome back to Elements in Focus. Today we're talking about long-term care planning. And today I've got Daren Hardesty, a certified financial planner with FEG, with me. Daren, this topic comes up in the office quite a bit. It's usually, the question arises around what is long-term care? Do we need long-term care? This is such a vast pool to play in. So can you break it down, what we look at in the offices for long-term care planning and some of the maybe nuances that people should understand?
Yeah, definitely. You're right, Aaron. This is a very common topic. In general, the families we take care of are either seeing their parents potentially going through some form of long term care, or they are preparing for themselves, or they're trying to figure out, what do I need to do? This is something that I don't want to be a burden on my family. I want to make sure that if there's anything I can do in advance to make this easier on myself or easier for my family, it's definitely something to consider. And demographically, it kind of ties into a lot of other things that FEG focuses on, and that's the baby boomer generation and their parents that are still with us that are living their life. There's a large amount of them that are going to live for a lot longer, and we just know that as you live longer, the likelihood of cognitive decline or physical decline is just those the likelihood of those things just increase over time. So it's definitely something that needs to be considered because it is a big financial cost if you're not prepared for it. So in general, for years and years, and we don't see them as often anymore, but there are different types of long-term care policies. You can have a direct long-term care policy. A lot of insurance providers do not offer them anymore, simply because they get used. Life insurance, most people die without life insurance because you get to a stage of life where you don't need the life insurance anymore. You're essentially self-insured on that end. But long-term care, this is something that a lot more people make claims for as they age. So you don't see a lot of long-term care direct policies anymore unless they were written late 90s, early 2000s. We still see some of those come up that we need to do some looking into. But buying those directly is just not as common. The more common thing you see today is more of a hybrid policy where you'll see a long-term care rider attached to a whole life or a permanent life insurance policy. This is the most common way you see it anymore. It's actually a really nice benefit. There are some additional costs to adding that to a permanent life insurance policy, but they have long term care benefits that essentially allow you to tap into the death benefit of that life insurance policy if you have a condition that qualifies for long-term care or terminal illness, end of life needs, that you can actually tap into that, and it's a good way that you can use that to help fund some of those expenses. A lot of families, though, they don't know it, but a lot of them they get to the point where what we call they're self-funded, where they have enough in their estate, and we can run the numbers and kind of talk through some of the numbers as far as how long you should expect to be in a assisted living or a long-term care facility, a retirement home of any kind. That differs between genders, and so and the cost. The state that you live in, those costs are going to vary slightly as well. But we, typically when we talk to a lot of our families, they have enough that whether they do it or not, that there's no risk of them losing a large portion of their estate or all of their estate in long-term care costs. That used to be the case more often anymore. Especially for FEG families, it's just generally not something that we have a lot of concerns about. So, just kind of talking about what these things cost, if we look at just some basic numbers here, depending on the type of facility you're going into, the cost increases. So if you're going into an assisted living facility in Indiana, that can be anywhere from $60,000 to $70,000 a year in costs. For that service, where essentially you can take care of yourself, but you're in a facility that if you needed some assistance, you have somebody there. A lot of times this happens when family's not close and you just need some assistance to make sure that if you had a fall or any kind of situation that you're taking care of. But the cost for those are generally less than what you have for a true nursing home or a full lifetime, long-term care facility. Private nursing homes, we're looking at anywhere from $100,000 to $125,000 a year in cost. If it's semi-private, we're looking more like 85 to 100,000. So depending on the type of care and the type of facility you're in, we're looking somewhere, around the 60 to $100,000 range in general. Now, for women, depending on when you start in the facility, women typically, on average, are going to be in that facility somewhere between 3 and 4 years. And for men, it's a little bit less. It's somewhere between 2 and 3 years. These are just averages that kind of allow us to look at this. So when we do individual planning for you, and determining, like, do you need this insurance, or do you need to continue covering, or paying your premiums for that insurance? We look at your estate, and we look at the amount of money that you have, the estimated costs, where your account values would be at the time that you potentially would need that care, and we just determine, are we in any risk of a drawdown? And if we see that, then we can guide people in the right direction on what to do. Keep in mind with long-term care, you buy the policy, or you have it as a hybrid or a rider along with your permanent life insurance policy. There comes a point where you have to claim or make a claim if you want to actually get into the policy. Keep in mind, most of these policies have a 90-day period that you have to wait before, even if you qualified, that before the provider will actually start paying those benefits. So it's important that you have enough liquidity in your estate that you can cover the stay for those 90 days. It's typically 3 months of cost. At the end of those 90 days, essentially the provider, the policy provider, saying, okay, this is clearly not just a short-term situation that we don't want to start benefits for too soon. You clearly need this coverage, and they start providing that coverage. To qualify for that, there's what's called activities of daily living. You have to, through some professional, a medical professional has to check to make sure that you can do at least 5 of the 6 different types of activities of daily living. If you can't do 2 or more of them, that means that the plan provider will start to provide those benefits to you. So the claims process can be very stressful. I remember going through this with a few families during COVID when they actually were evaluating over the phone or over a virtual call whether or not somebody could meet their ADLs, those activities of daily living. It's extremely stressful in a time of need, but it's important that you understand these. So these are very common: bathing, dressing, toileting, transferring, getting from one place to another, a bed to the chair, for example, continence, and then eating. If you can't do 2, or if 2 or more of those things are something that you cannot do on your own, and a medical professional evaluates that, that's when that policy, the benefits start to come from that. So like everything we do at FEG, we are trying to make sure that we analyze this. This is not a one-size-fits-all solution for everybody. We make sure that you understand, hey, this is definitely something that you need, or this is something that's not really a risk that you should be concerned about. No reason to pay extra, pay extra money for the policy if it's not needed. And just to kind of play it out with our families to make sure they understand, hey, if something does happen, here's what we would do. But these are, this is a very common thing. And if you have more questions on it, please reach out to us. We'd love to help you with that and make sure that you feel like, hey, you are protecting yourself from future risk. And that's what these policies are for.
Yeah, thank you so much, Daren. If you haven't, just understood the mass complexity in the 7 minutes that Daren just gave a high-level overview of long-term care, there's a lot going on. There's a lot of moving pieces, and we really want to make sure, if you're evaluating that you've got a trusted partner that can come alongside of you to help you make that decision and not thinking in a silo. So as Daren mentioned, there's a lot of different ways we can do it. We can self-insure it through enough assets. You can transfer the risk to an insurance company, or you could spend your assets down and go on a Medicaid type spend down plan. All of them have different outcomes. If you're looking at protecting assets overall, long-term care insurance is a wonderful thing to have. Please call us, schedule a complimentary next steps meeting, 800-928-4001. Send questions to talk to FEG at yourlifeafterwork.com, or go to yourlifeafterwork.com, fill out our contact us form, and one of our awesome advisors will reach out to you, get your questions answered, and get a meeting scheduled with us. Thank you so much for watching. Have a blessed day.